We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Jaime Carrasco, Portfolio Manager at Carrasco Wealth Management. Jaime, thanks for joining me again. It's great to see you finally.
And nice to have me back. This is great. It's been a while.
You know, the last time we spoke, you said you were going sailing, so it's nice to see you back in harbor. And why don't we start by kind of catching up on how you see the world. You know, there's so much to talk about, whether it's, you know, obviously Trump being elected, all of the tariff ideas, the incoming Treasury Secretary and how he sees gold. So why don't you start by giving us your kind of 50,000 foot view on how you see the markets at this point?
You know, that's a great question, because I think Trump, first of all, you know, Trump is an emotional character. So right off the bat, what my advice to people is to understand that the world we're living in is more like a movie. Mm-hmm. We have no control. All we can do is analyze the people, the changes. And, you know, like Who Shot JR? Back to that Dallas show for older people that understand the analogy. But it's no different. My approach to the world is to see all of the changes that are happening and try to understand how those changes are going to affect our lives going forward. Mm-hmm. And I think Trump is going to be consequential in those changes because he is a disruptor. He is changing the world as we know it. So a good example of what I mean. You know, everybody that was saying that he wasn't going to win now is saying that everything's okay. Personally, that's not my opinion. I personally try to peel away the onion and look at the different aspects. And the first question is, what is MAGA? Make America Great Again. What does he mean? I think that's an important question because to me, MAGA is the unwinding of the economic model of the last 40 years, the economic paradigm of the last 40 years. Now, that economic paradigm, what was it? We're going to build cheap things in Asia, fund it through debt, again, credit, and then bring it back to the US at very, very inexpensive prices. Now, what he's proposing, though, is a complete unwinding of that economic paradigm where he wants to have it built in the US and completely reverse that paradigm. The first question I would ask right off the bat, well, what's going to happen to the equity value of all the companies, multinationals that have benefited from that old paradigm? Are their equity value going to continue? I would say that it's highly unlikely, right? The other problem in that paradigm is what do we do with the debt? Because that's his biggest clutch. How do we resolve the debt issues going forward? And here, I think it's important to understand the signals that the bond market has been pointing out. I sent you a chart that, if you can bring it up for a second, that really shows the dichotomy or the different signals that the bond market itself has been given versus the stock market. You know, if you look at the bond market for the last year and a half, when the Fed started signaling that they were going to cut interest rates, for the last 40 years, every time that they cut rates, interest rates in the long end of the curve have tended to go down. Mm-hmm. This time they didn't, they started to go up. So right by default, that's a complete divergence of the last 40 years. The other problem is that the stock market has taken off. But in my opinion, it had taken off because of what we call the Magnificent Sevens and the fact that it's all that money that's filtering back that was issued through COVID. But the bond market, the rise in interest rates is signaling something completely different from the last 40 years. It's signaling that inflation, all the numbers that the BLS, the Bureau of Labor Statistics, was putting out. You know, I kept pointing out, if you read the fine print, Fidel Castro would have been proud of these numbers. Right. To me, they were silly because a lot of it was statistical anomalies, and the bond market had been signaling that. Now, this is the biggest problem because the global economy and to a big extent the U.S. itself rely on the 10-year bond. Well, if you look at the 10-year bond, we're sitting at 450. It never came down. It went down just around 4 and then started coming right back up. Same thing with the 30-year bond. Mm-hmm. And that is consequential because it puts a crimp on MAGA Trump, on whatever plans Trump is going to have to rebuild the U.S. economy. And think about what's happening with interest rate expense. That tax revenue is overwhelming the interest rate expense that the U.S. is paying, and that's only going to get worse, right? So I think that's important because we have two solutions. How is he going to fund it? Is he just going to print money? We can take the chart down, but it really gives a pretty good example of how the bond market has behaved differently. Now, so what's important to understand is that in the nut of it, gold is in the middle. No matter what happens, gold and precious metals are back in the middle. Because again, it goes back to 4,000 years of history. As JP Morgan said, gold is money, everything is credit. And the problem is credit. Mm-hmm. So how does Trump resolve the credit situation? One of the problems right now with Trump is that there's a lot of noise. We haven't really heard much economic policy, apart from tariffs, which is the only thing he wants to do, and from the individual players like Scott Bessent in terms of some of the things that he's saying. What's important, though, if you look at it from a historical perspective, the whole move to tariffs, I think it's important because he's signaling a return to the 1930s, a return to that mercantilist system of the U.S. where a lot of the revenue in the U.S. was funded through tariffs, not Internal Revenue Agency. Which again, it's important because that thing that he signed, that he's getting rid of the IRA and turning it into the ERA, mm-hmm. right? To me, though, those are very important signals because what a better way to drain the swamp, as he calls it, now that he has political goodwill, than to get rid of the IRA. Without the IRA, without the funding of taxes, how is Washington going to fund itself? It's important to understand that the Achilles heel of the system is the US dollar. And to some extent, it's to his benefit to drain the swamp through the US dollar. Now, he does talk about the US dollar as the reserve currency, but is that a fiat dollar or a back to gold, gold-backed dollar? Now, that's important because if we go back to the 1930s, that's when Roosevelt resets the monetary system, May 5th, 1933, using the gold reserves. And that's already being hinted by Judy Shelton, who I think is an important player in this because she was the person that Trump nominated to replace Janet Yellen when she was stepping down from the Fed. She moved over to the Treasury and Powell steps in. Now, she was given her time in Senate thanks to Ron Paul, mm-hmm. Senator Ron Paul, who was chairman of the Huxley Committee that oversees the Fed and the Treasury. Now, he's also working with Elon Musk on the Dodge Commission, right? So when you start to see the different players in the puzzle, you start to see a better picture. Now, why is all this important? Because gold is money. And the U.S., I believe, still has those 8,000 tons of reserves. And what is Judy Shelton's call for dealing with this? She said, why don't we issue a $5 trillion bond, payout for over 50 years, backed by the U.S.'s gold reserves? You know what? That's a great idea when you really think about it and you put it in a historical perspective, because it's exactly what Roosevelt does in 1933. And it's important to understand to equate to 5 trillion, which would be a nice little line of credit to rebuild the U.S. Each one of the 8,000 ounces or more should be priced at around $15,000 an ounce, which is great for us gold bugs, those that understand history and economics that are holding on to these securities, because we're going to see the lift just like we would have done in the 30s if you had owned Alaska June or Homestake Mining, the big mining companies at that period, right? And so, as Dalio said, if you don't understand history or economics, you don't own gold. I understand them both, and that's why I do own them. And I think that the way to deal with debts has always been the same, and I see a similar pattern going forward. And to some extent, Scott Bessent, who did a podcast that I posted on my LinkedIn account, it was one of the few things that I posted because I thought it was so important, also addresses that issue, right, in terms of where we are going forward. And I think before we look forward, we can probably look back, and I sent you a chart to look at that to try to understand we are positioned right now. And also what I would call the level of investor cognitive dissonance to money itself versus credit.
I mean, as we think about, let's say, the mechanics of making these gold bonds or, these gold-backed treasuries, in a way, this redemption mechanism that Nixon stepped away from because the gold reserves were going out so fast, is that something that you think is a risk with that type of gold-backed bond?
No, not if they have the reserves themselves. Because over a 50-year period, which is being proposed, there's enough time to rebuild the U.S. economy. Roosevelt did it in what? From 33, the Second World War starts in, when did the Germans invade Poland and Czechoslovakia? Was in that 39 or so, maybe 1940, if I recall. And then the U.S. doesn't enter the war until 1943, I believe, with Pearl Harbor. Mm-hmm. So between 33, they gave the U.S. 10 years to rebuild. Well, look at all the work that Roosevelt had done by then. I would never underestimate the Americans' ability to do the right thing and rebuild their country, right? And let's talk about that for a second, a little bit after, in terms of going forward and how I see the puzzle shaping up. But let's look back for a second. Mm-hmm. So what's important about this chart is that these are the last 4 times that we had monetary issues in the world, mm-hmm. right? And the response of institutional money and money that understood gold in terms of the ownership in the gold and gold miners through that period. It stood at about 28.
So just for those that are listening on audio, the last times that Jaime is talking about is 1921, 1932, 1948, and 1981, where they averaged 20 to 30% of gold and gold miners as a percentage of total global assets. Now, right now in 2024, we're somewhere around 1%.
That's me. That's me. Very few in the sector that understand history and economics. But let's review 1921. So 1921, the Second World War is over. They're rebuilding Europe, and we have a massive problem. Then 1932, the 29 crash. 1932 is important because unlike 1980, where it was an inflationary storm, there was political cohesion. 1932 is completely different because you not only had an economic storm of inflationary storm, but you also had a political breakdown in the world, right? That causes the big depression of the 1930s, which forces Roosevelt to reset the price of gold versus the pound. Now, why is that important and more analogous to today is because that was the last time we saw a political void within systems. Look at what's happening in Canada and France, Korea. Who'd have thought Korea was going to be in political trouble, right? So it's important to understand that the parallels are there, and that's important because when you have a political breakdown, you also have a breakdown of trust in the political system. Well, think about it in the context of the fiat world where we're living in, where every bit of credit is backed by a government that might not be there to pay you back. Mm-hmm. So what happens, right? Think about Canada. We have no gold, right? I'm comparing what's happening between Canada and Australia right now, where Australia still has 80 tons of gold for its people, the central bank. We have nothing. And that's showing in the Canadian dollar, which last week closed above $4,000 an ounce for gold versus $2,800 in the US. Well, a couple of years ago, that was at par. So gold is tracking very well. So 1932, I think, is also important. 1948, after the Second World War, well, that's when we said Bretton Woods, which again resets the system back to gold. In 1981, Nixon unpegs us, and we unleashed this massive inflationary storm that I think now is coming back because 1973, he temporarily unwound created the fiat system we are in that allowed for this amazing debt bubble to grow that now is trillions and trillions and trillions of dollars that will never be paid back. So how do we pay it back? And so in that context, what is amazing is that gold is already doing its thing as much as institutional investors don't yet see it, right? And one of the things that I have urged my clients and what I've been trying to do for clients is looking at my Latin American experience, looking at how Chile, Argentina, all of these countries dealt with that inflationary storm, and why gold within that context was so important to set up our own gold standard, right? So if you move to the next chart, and that's what's happening to to institutions right now. It's 1% invested in commodities. We have this asset allocation that is very similar to what was happening coming into the 70s and 80s, where you had this 60% of money just sitting in pools of money, because from after the Second World War right into the 70s, we had what was called a Nifty 50 period where everything was moving. So you could throw a dart at the Dow and you would make money. So there was no need to think. But what happened in the 80s, inflation hits, not everything starts to work because not every company within each sector starts to keep up to the loss of purchasing power of money. Again, inflation is not that things are going up in price. It's that your money's losing purchasing power, like the Canadian dollar, right? So what I see here in this chart in terms of how people are invested today is making the same mistake that they did coming into the 70s and 80s, where everybody's a 60-40 model. 60% in equities, 40% in bonds without really thinking about it. But the only way you survived through the 80s was to switch to a 30-30-40 model, where that 30% in precious metals was doing a thing because of the next chart, if you don't mind moving over. This is the beauty of the sector, that historically, and this has repeated time and time again, because gold and silver rise in times of depreciation of purchasing power of the money, the free cash flow of the sector tends to take off. And that's already happening. This was Q2. This quarter, I'm keen to see where Agnico Eagle, that's the one company that I've been mentioning since 2015. So it's been my top pick all along on BNN and all kinds of things. And I still hold a great position. And I'm so happy to have owned it all the way, because the cash flow keeps building, the dividend keeps increasing. They're producing gold at below $1,000 Canadian. Well, at 4,000, that's a hell of a profit margin. So these margins continue to grow, but even in the context of information technology, right? Because the problem is that most other sectors are not keeping up to the loss of purchasing power. The only sector that tends to stay ahead of it is precious metals, and that's why by default, whether kicking or screaming, institutional investors, pension plans are going to have to switch into that sector. Now, what's interesting is that I see what's happening within Quebec. Quebec is the only province that encourages a continued investment in the economy of Quebec. And so you're seeing an outperformance within the miners because they are overweight. But if you look at the Canadian pension plan, and one of the issues that Pierre Lassonde and Frank Giustra are starting to lobby is that the fact that the Canadian pension plans have no hedges for the inflationary storm that's already starting, right? Which creates a problem once we start to pull apart the puzzle of Trump and how he resolved the debt, and which we'll talk a little bit later. And that's important because this is why, if you understand history and economics, you own this sector, because it's the one area that will tend to deliver on profitability at the very same time that money itself is devaluing. Because the problem is not the value of IBM or the value of Apple or the value of Microsoft. What's important is what's going to happen to the value of Microsoft in US dollars if Trump has to devalue the fiat dollar versus his 8,000 tons of gold to create a brand new line of credit to rebuild the US. That's the true dilemma. And that's usually the solution to these problems throughout history. It's what Roosevelt does. It's what Churchill did for the British. He didn't raise the price of gold enough after the First World War, or coming into the First World War. And let's not forget that Isaac Newton set the gold standard in 1778, him and John Locke, for the very same principles, because gold is money and everything else is credit.
So Jaime, just to kind of crystallize that a little bit more, or linger on it a little more, this idea that basically we've entered this world, or over the last 40 years, we've built this world of hyper-financialization, and that's brought gold and ownership of gold miners down to this 1%, around 1% level, because of this margin expansion now. That's what you see as the catalyst to really forcing the world's eyes back, and especially the West's eyes back to the precious metal and what is money, right?
Well, you know what? Greed eventually offsets fear, right? And the greed of passing up on a dividend from Agnico that now is tracking 3%, and it's been 3% steady because it continues to build. I can tell you that within my precious metals portfolio, I have 4 companies now paying a dividend, and that is a repeatable event. Let me back up on this because this is important. Rick Rule was talking about how Rick Rule, I appreciate him because he's 15 years my senior. We've known each other, and he was relaying a story about how he had bought a stock in the 70s for $1 that went down to 10 cents, only to sell it at $10. I thought that was pretty interesting because if you look at the experience of the 30s, had you bought $7,000 in Alaska in homestake mining, 7,000 in gold turns into 35,000 in then dollars, but 7,000 in homestake mining turned into $70,000. Paying you 10% right into the setup of Bretton Woods, right? So the dollar value turns into its dividend value. That's already happening, and Egon von Greyer's pointed that out. He wasn't looking at the equity increase, but he was looking at the cash flow that the sector has tended to pay out over these periods, and that's already happening. It's happening with a number of the companies that I own, and I'm seeing those dividends start to grow. Well, what happens at $10,000 gold if Judy Shelton's plan of a $5 trillion bond that's taken to effect, right? Well, the cash flow of Agnico Eagle still producing at 900 is going to repeat Alaska Juno homestake mining back then, and that dividend will translate. That's a great thing because that's the dividend I plan. So I've always said that I own gold right now because what we're living through is different than before because we need a reset to deal with the debt. I have always stated that as part of the core of my investment strategy that it's highly probable that we're going to go through a reset that's going to have to reset the old debt. Well, think about this. What happens to all that money sitting in U.S. treasuries around the world if all of a sudden that old dollar value gets devalued by a new line of credit worth $5 trillion at $19,000 or $15,000 gold, right? The purchasing, they haven't defaulted on their debt; they just devalued the debt. But that pension that was depending on that, the cash flow that you're going to get will be no dissimilar to what happened to the Soviet republics when they break up. You were still getting that ruble, but it was buying you a penny purchasing power. Right. So the mechanics have always been the same. What is important is if we look at Trump, how does he resolve the issue? Well, I think it's quite brilliant because I think a way that I would approach it, thinking out of the box, would be, hey, let's get rid of taxes for a second. If you don't pay, yes, we are going to have a lot of economic pain because Medicare, Medicaid, and Social Security, it's going to disappear. You're still going to get that check, but it's not going to buy you anything. But you know what? You won't have to pay taxes to Washington. Well, first of all, I think that a lot of his MAGA supporters are going to say, you know what? I'm willing to take that pain because at least now I'm draining Washington. That's not a bad outcome. But what happens to all of that debt in U.S. dollars? It gets unwound. Now, this might sound crazy, but let's talk about Scott Bessent for a second, who now was nominated new Treasury Secretary yesterday. I did the only post that I've done since I've been out on the water was the interview that he did in early November, and he hasn't done any. I don't think he'd be doing any more now that he's Treasury Secretary. But I thought it was very important because he approached his investment stance similar to what I've done. First of all, 40% of his portfolio is in physical gold. That was very indicative because I have, apart from Ray Dalio or Druckenmiller, those are those are the few that have that such a large percentage in precious metals. What's interesting is the why. So the first thing he says is, I like gold because of the fiscal imbalances between China and the U.S. Exactly what we're talking about, right? The model, the economic paradigm was built on that debt, and that has to be unwound. The next thing he says is, I'm not a trader, I'm an investor. And the last I love periods of long term where the prices stay low because it allows me to average down on my positions. Well, I haven't ran away from this sector. That I think we did an interview 3 years ago where I was saying how cheap these stocks are. Mm-hmm. All I've done is had a process by which to add more shares at cheaper values. What's interesting is some of the junior silver companies that I own, some of them were trading around $3. Now my average cost is below $1. And I have way more shares because I had a good process of adding to those companies by asset allocation rebalancing. Mm-hmm. So I'm very well positioned. So I've done exactly what he did, right? And now let's talk about the core of his investment stance, which is the return to equilibrium. And that, to me, the fact that he owns gold is so clear because what's he talking about? If gold is returning back to the monetary system, $27 or $3,000 or $3,500 gold is just not enough to do what gold has done for 4,000 years. The return to equilibrium of gold, and here if we can move over to the next chart, I believe. What do we have? Yes. So first of all, gold at 27.23 on where this chart was is just nowhere near where it has to be at equilibrium to function as money for the world. And anybody that thinks that, 5-6 years ago when I was talking about gold and the monetary shifts and history, a lot of people were saying, well, what are you talking about? You're crazy. Well, if people don't see it now that gold is part of central banks and they keep buying it and gold is in the mix, well, you're naive to you're not really looking at what's going on. So $2,700 gold to return to equilibrium has to go back much higher than this level to do what it has done. Well, in that case, what's even at lower equilibrium is silver. Mm-hmm. Silver right now at $30 is an economic anomaly. That's a beautiful thing for investors that are not in. Why? Because the historical price of gold to silver for 4,000 years, 1 ounce of gold has always purchased between 16 and 30 ounces of silver. Now, that is a geological ratio because that's what we pull out between 16 and 30 ounces of silver out of the ground for every ounce of gold we pull out. So the fact that now it's trading at 90 is a massive opportunity for those that can think out of the box because it means that silver has to go a lot higher, right? But now if gold
with a proper time frame or time horizon based around that idea, right? Like thinking about it as an investment.
Correct. You can't think about it. These are opportunities to generate multi-generational wealth when you start to think about where we're going. Right. I don't care for the Magnificent Seven. I care about this because this is an area where I've had 3 years to build solid positions in companies that are going to deliver massive value. So think about silver. Silver, just to catch up to $2,700 gold, it has to go above $60 to $80. Mm-hmm. Well, what do you think happens in that return to equilibrium to the earnings in the companies? If you move over to the next chart, here's where that equilibrium is more out of skew, the miners. Mm-hmm. The miners right now, and these are the gold miners, the miners have to go up at least 300% to catch up to gold. And, will they? Of course they will because of their earnings. Well, if that's the case for the miners, where 1% of the people own them, the silver miners are even cheaper. And those are my babies. Now, why is silver mining to me more important? Because again, I've been participating in the sector since about 2005, 2006, watching the debt bubble get bigger and bigger and bigger, right? In 2009, my strategy turned 100,000 into $1 million because I had silver within the basket. 100,000 just in the GDX, the index, turned into $350,000 from 2009 to 2011, that high in the market. I think this time the move in silver is going to be even bigger because we weren't even nowhere near 90 to 1 gold to silver ratio then, right? So the opportunity is even better. And so properly positioning in companies, I think is the way to go to benefit from their earnings or dividends and everything else. Now, there are risks, and that's where you need a professional. So my quadrant of choice is, first of all, management is key. The two companies that I've mentioned all along for gold and silver, Agnico Eagle, First Majestic, they've been my top picks. Well, Both of them, I think, are set up to be leaders in the sector, especially now with the merger completed between Gatos and First Majestic. I think it's as important as the merger between Kirkland Lake and Agnico. Mm-hmm. What is really interesting is that I funded Kirkland Lake before the Tour Lake before they drained the lake. That is now owned by Agnico Eagle, so I still own it. Kirkland Lake was in the portfolio right off inception. I still own it through Agnico. Gatos I didn't, but I like the merger between First Majestic and Gatos because now that sets them up to be one of the three biggest silver mining companies in the world, right? Now, they're not 100% silver. There's some in the portfolio that are more skewed to silver that I like even better. Mm-hmm. But it's going to be a leader in the sector, and it has a dividend. Agnico, same thing. They're both going to have really good growth. But back to 2011 to 2009 to 2011, having that overskew to silver was key to really maximize the performance in the portfolio. And I think the opportunity is even better now because silver at 30, think about what's going to happen to the earnings of some of those silver companies. The leverage is going to be amazing. And that's where I'm shopping right now.
But Jaime, when we think about how, these periods of time where silver went quite a bit higher, those were very short periods, or those ended up being short periods of time. So how long can these silver miners really capitalize on that margin expansion?
Tom, one thing that I have a lot of clients asking me exactly that very same question. And the answer I have to that is this. Look, if I'm correct, and we're living through a paradigm shift of historical proportions, mm-hmm. Gold was going to reach a level from which it'll never come back. It did in 1776. It gets set at $7 an ounce by Isaac Newton and John Law. It stays there until about 1914. The whole Industrial Revolution was built on $7 an ounce gold. Mm-hmm. The First World War forces Britain to be the first one to raise the price to $17. Roosevelt resets it up to $35, where it stays until 1975. I don't think we're going to see $35 gold ever again. Then we get to 800. 800 is the new level. And I think that a reset is needed to pay off the debt. And that reset right now, I figure if you follow the math just on that $5 trillion bond, it's above $10,000 an ounce. And if we hit that, if we do have that reset, gold will never come back below 10,000. That'll be the new set for the global monetary system. Mm-hmm. Well, guess what? Silver's not going to stay at 30 in that reality, right? Silver has to reach a new level of to reflect that new price ratio, and that's going to be the level. Now, that offers an amazing opportunity to those that understand history, because it allows us the ability to buy into industries that are being given away because your average pension plan doesn't own them. The average investor could definitely build positions in here that are going to pay you a beautiful dividend, just like they did in the 30s. The beauty of that is that if I'm correct and we are living through a paradigm shift, I'm not selling my companies. Mm-hmm. Because if I have $100,000 invested and history repeats or history rhymes, I'm going to be getting $100,000 in dividends for a number of years. That's the money I'm going to go and invest. At the same time that everything gets really, really cheap, as it did in the 30s, I'm going to have the cash flow. So think about it. You had invested $7,000 in 1933 in then dollars. And all of a sudden from 1935 to 1947, you're getting $7,000 in dividends when a house was $3,000 through that period. Why would you sell your stocks? Mm-hmm. Right? So I'm looking at a completely different paradigm. Now, the more that time passes, the more that reflection becomes real, especially when you listen to what, and now we have blockchain within the mix. It was really interesting because Judy Shelton, I have not heard the interview, but she was talking about, she did a presentation in New York on behalf of Yahoo Finance, and she tweeted out and she said it was so nice to discuss a gold. We can turn the chart off now to discuss a sound money within a blockchain based system, right? That's exactly what we were talking about 5 years ago when I said, the beauty of blockchain is that since it's a decentralized ledger, it offers us the ability to set up a decentralized banking system, which means no bankers. Mm-hmm. Now, what's really interesting. So there was a discussion going on on online last week, and people were talking about Enbridge. And I think it was Santiago
Brent Johnson.
The milkshake theory.
Brent Johnson.
Said, well, the U.S. should just get rid of, just forget about Enbridge. And I said, why would they do that? The Enbridge on its own is a beautiful tool for anybody who wanted to reset a monetary system with 8,900 tons of gold, mm-hmm. right? It's very liberating, and it'll use less bankers. Well, everybody'd argue, but then I posted that on Grok. And I'm going to repost my Grok answer so people can read it. But Grok got it. Grok understands that a decentralized ledger also allows for a reset completely of the system without the need for bankers, right? Because all it is a trading platform so that countries can trade among themselves, and you need a peg back to gold. Mm-hmm. The reason why we needed the SWIFT, because we didn't have a centralized ledger. But with a decentralized ledger, the system's already built to function decentralized, still using your currency. The problem is, how do we deal with the old debt in the fiat system? And that's where the reset comes in.
I mean, do you think that, this undervaluation of these gold companies and the, lack of interest in, the resource sector as a whole is partially due to, just mining being such a crappy business overall? And
no, I don't. You know what I think it is? I think it's a generational issue, right? I'm lucky enough to have. I'm old enough to have been taught the business by the last generation of bond traders who have worked under a gold standard, mm-hmm. and gold was traded on the bond desk ahead of the U.S. dollar. So they banged away in my head that, hey, you got to look at gold. Mm-hmm. Anybody younger than me has no idea what gold is unless you're Asian, right? Those guys understand what gold is because for them it's always been part of the ethos. Mm-hmm. But in North America, we've been accustomed to this credit bubble, so that generational, there is a gap, right? And that is, again, because they don't understand history or history more specifically. They might understand economics, but not further than 40 years, or they're Keynesians. They don't understand the mechanics even of a mercantilist system, right? I love history, and I've always tried to understand as much as possible, because the further back you look, the further ahead you can see. So I think it's more a generational issue than anything, right? In terms of the fact that we have not been in a gold standard, and they have not worked or had the need for it, but they haven't bothered to understand, hey, how do we pay for all this? Right? How are we gonna depend on 4 generations of people to pay off the debts that just this generation accrued? Mm-hmm. I don't think the future generations are going to be that silly.
Mm-hmm. And I think that kind of brings this idea back in of this cognitive dissonance that you were talking about in investors at this point. I just want to wrap my head around how all of these things kind of resolve to you because of this, this 40-year paradigm shift. Is that what ends up being the catalyst for that?
It could be, or the reset occurs, or someday we wake up and Trump says, okay, that plan of the bond, we're doing it. We're shutting down the system. We're going to get rid of the IRA, set up everything new, and we wake up into a brand new paradigm, as they did in 1933. Mm-hmm. Right? If you had the foresight to understand that what Rousseau was going to do was inevitable, you would have positioned ahead of. It's funny. I got a great story on exactly this. Don McLean. I was recently invited to the Mining Hall of Fame. I was invited by Justra, who just got one of the inductees. But the other inductee was Don McLean. Don McLean passed away last year. He was 90, and his father was the mine manager for the Hecla mine up in northern Ontario. So at the age of 9, sitting around the round table, they would talk about head count, right? So he knew mining. He lived mining. And when we first sat down, he became a client and a friend along the way, and met him through his daughter, sorry. And the first time we met, he said to me, Jamie, I have a lot of physical gold, but I don't like the companies because I work for them. It turns out McLean Engineering is kind of like the Tesla of mining gear. And he figured that out. He built a beautiful company over the years. And I said, well, I get that, Don, but hear me out. So I said to him, my strategy is that history is repeating, and we're going to go through a similar setup as the 1930s. And I said to him, you have Homestake Mining that because of the reset was paying a 10% dividend. And he screams out, my father waited quarterly for that check, right? And I said, oh. Immediately, my next question was, because he knew what I was talking about, I said, so did he buy it before or after the reset, May 5th, 1933? And he said, he always wished he had bought it before the reset. And I said, I don't know when the reset is, but if history is repeating, we're going to have the same thing. Mm-hmm. His next words were, how do I sign up? He understood what I was talking about because he had lived through exactly what we're going through. And his father had bought the dividends in Homestake Mining. Now, he was one of the few that had a job through the 30s in the mining sector. So he had bought the shares in Homestake Mining for the dividend, but after the reset, right? So again, I think it's important to understand that history repeats and these patterns, it's not new, mm-hmm. right? As much as, they think it's new in our lifetime, it isn't. Mm-hmm. Right. And the same thing is occurring again. It's the best way. The only way that Trump is going to look, there's only two roads ahead. Both goes in the middle. Mm-hmm. Either he's going to inflate to pay for everything, but that's going to create greater pain for Americans, or he resets and you have less pain, but a much quicker solution. And I think Americans will deal with that much better. They've done it in the past. And I think they're going to align themselves behind their president. Again, I'm one of those that thinks that if you look at the fact that he's won the House, he's won the Senate, he won the presidency, Americans are behind him, right? I don't try to understand Americans. I like Americans because at least what you see is what you get. But they're not sophisticated. They like their gun, they like their church, they like their community, and I'd rather hang out at the bar with them and chat, right? So I think that positioning is important. But I think people have to start looking forward and at history and economics to fully understand the setup. Mm-hmm. So are we going to inflate or are we going to reset? Reset is the easiest solution.
I mean, do you not think, though, that despite, making a reset and I think it's a sound argument that you're making for the reset, but won't that be inflationary as well, considering, all of the...
We're going to get wet anyways. Mm-hmm. The question is, how do you dry the fastest? Mm-hmm. Right? And what causes the least pain? The least pain is a reset, because then you can start the rebuilding process ASAP. Mm-hmm. Again, you have to understand, look at the economic process of what we're talking about in Argentina and Chile. Chile is a better example because, and look at what's happening in Argentina today. Right. And it's funny because Milei and Trump chatted for 3 hours in Mar-a-Lago. Mm-hmm. And I'm chatting with my Argentinian clients and they're like, oh, this is great. My neighbor just lost his job, but the government was paying his wages. So I don't care. I was paying him. Yeah. Right. So people are accepting the economic pain that is happening. But now they're seeing a rebuilding process begin. Right. It's kind of similar to what Pinochet does in the 70s. Now, Pinochet is a complex character because he wasn't a very nice guy. But what he did for the Chilean economy was great, because the Chilean economy it's 3,000 per person debt to GDP, because you can't raise debt unless it's approved by all forms. That's up to government. That the constitution that he said still hasn't been changed, and it set the reset for Chile. So Chile, I think, is ahead of everybody else. And I think that kind of reset is always easier because you can start the rebuilding process a lot quicker, mm-hmm. right? That's why Chile, over the last couple of years, my period with Scotia, working in Chile, covering Chile for Scotia, was so amazing, because not only were Chileans understanding the economic pain that was coming because they had lived through it. So that's why I set up the portfolios the way I did. Mm-hmm. and now it's global. But they also saw the benefit that Chile was gaining ahead because of the cleansing that Pinochet allowed to occur. Right. So it's again it's the lesser of two evils. The best one is whichever one cleanses it quickly, the quicker. And I think a reset is definitely the way to go if you want to achieve it as quickly as possible with the acceptance of a 4-year term.
And, going back to the original point about this disconfirmation, let's say, of the bond market for where we are right now, what does that reset end up doing to the bond market if we have that anchor of gold?
Well, you're still going to have that debt. A reset doesn't mean that you defaulted on your debt. All it means that you're still paying that dollar of debt, but with a new dollar that is worth from 2,500 to 15,000 incrementally more than the purchasing power of that debt that you have. So you're still going to get your $1,000 in interest, but that $1,000 in interest is going to be worth $1 in the new currency. Right? So you're not defaulting; you're just paying it back with a completely revalued purchasing power currency. Right? And it's funny because that's exactly what has happened in Latin America when you get the new peso and the new peso. Right? So you have your old peso that was worth much less, right? So the mechanics are always the same. It happened in Germany. It happened in Britain through after the First World War, right? It's always been the same. They just don't tell us when, and that's the key. You got to be ready,
right? Position before.
You have to position before, correct? And that's what I've been doing for clients.
So, Jaime, stepping back from this, this reset idea, and kind of going back a little bit more into what happens in that interim, one of the biggest things that I've been getting a lot of questions from listeners about is this idea of tariffs, especially on the metals. So again, does this end up being inflationary on the commodities side, or are there ways around, one or two particular countries at this point that are tariffed by the US being able to still put that metal into the world and, kind of have it come back in a roundabout way into the US if that's where it's needed?
That's a really good question, because that's a two-edged sword that cuts both ways. Because the problem in the US is that you're not producing anything right now, right? So how is that resolved? Look at Canada. Yeah, he puts tariffs, we tax, we slam back with our energy. But the problem is that our pipelines have to go through the U.S. before they get to Ontario. So we have a problem, right? But again, I think everybody's going to lose. Is who loses the most. I think that the important thing, though, is that it raises the prices of these commodities because now we're fighting for them. So it's supply demand again, and so you're better off owning them than being away from them. So I'd rather own hard assets through that period than not, right? But it is a fine-edged sword. But how long before the U.S. can start really? So think about MAGA, and he brings back everything to the U.S. Well, you have to build the refineries, you have to rebuild the roads, you have to build the infrastructure, and don't tell me that it can be done, because I'm looking at China. Look at the high-speed rails in China, right? Over the last, they've added 25,000 kilometers. California, they couldn't even add 1 kilometer, and they spent how many billions, right? Yeah. So I think it requires leadership, and I think leadership will come, and I think it's doable, but it's going to take time. It's not going to happen quickly. But I think as well, there's a lot of opportunity in that transition to those that can position themselves. But you got to think out of the box, and you got to position early into the things, and that's why again I love Scott Bessent's interview. And what was amazing, because the first time that I heard his name, I didn't know who he was, but right away I checked, the web, and it was, he's a Soros guy. Well, right off the bat, I'm like, well, that doesn't matter, because Jimmy Rogers, one of my heroes who I met along the way, he was Soros's partner. Well, it turns out that he trained with Jimmy Rogers and Druckenmiller, another bond guy that I really appreciate, and both of them love gold and silver. And all they've been doing is, as Jimmy Rogers always says, I wish I could buy more. I'm going to buy more if I can. Right, so they've been adding and adding and adding, which is exactly what I've been doing for clients.
That idea of the double-edged sword, this fine balance to be struck, I think, with the tariffs is a really interesting one. If you're basically importing, let's just say 90% of what you need to run the country, then slapping tariffs on everybody, at some point, the rest of the world is just going to say, well, no, we'll just sell to each other and you can be excluded, kind of thing. Like if it gets to that point, right?
But it is getting to that point. And what do you think? Central banks are buying gold like crazy because they understand that gold is money, right? Mm-hmm. And to some extent, you also have to understand that what percentage of whatever Trump is doing is just noise or negotiation. I was watching him sign those things during the inauguration, and he was saying, Spain's part of the BRICS. I don't think he's naive enough to not understand that, Spain is not part of the BRICS. So to me, that was key, right? Another thing with the BRICS, 2 years ago, before the election, the media was telling us that BRICS was inconsequential. Mm-hmm. Well, now it can't be that inconsequential if it's part of the whole argument that Trump is presenting, right? So they're a bigger force than people would understand, right? So now, how do we balance it? Also, when I really think about it and pull all this apart, I think it's important to understand that if Trump resets and uses Enbridge, his interests lie more with Putin and Xi than with the West, right? Because again, let me back out. To me, this election wasn't about Democrats versus Republicans. To me, this election was Americans taking back America versus those that want to win the America. And what am I talking about? The bloodline of those that won the U.S. in 1776 versus the bloodline of those that won it back because they lost it in 1776. And so the easiest way now for Trump, now that he's won it, and here's where we don't know because we don't know he hasn't implemented any policy, but a lot of noise, is if he follows through with actually rebuilding America for Americans, the easiest way to do it is with a reset. Mm-hmm. And even though Americans are going to have a lot of economic pain, and so will the world, I think they'll rebuild faster mm-hmm. than anybody else because they do have that gumption. Mm-hmm. I would never, I'm with Churchill on that one. Americans sooner or later will try the right thing.
After they've exhausted every other option.
After they've started every option, correct.
Mm-hmm. So do you think that, once, as you said, there's a lot of noise right now, a lot of things happening, a lot of kind of puzzle pieces moving all over the place. Do you think that really Trump feels this pressure of this short window in which he has time to get a lot of this stuff done? And considering that, this is going to take some time for these changes to take shape, right?
The question is, when do you cut the ribbon? Mm-hmm. Once the race starts, we'll know, right? So we're all waiting for that start. Mm-hmm. Once we get the gun to go, then we'll know. Mm-hmm. However, to me, the race ahead is pretty clear because a reset is needed, and I think that's what they're aiming for, mm-hmm. A full reset of things. Right. And the key question is that the U.S. still have its 8,900 tons of gold at Fort Knox. And that's a big debate. I think they do because, in my opinion, the fact that it's at forts guarded by the Army, the Treasury has access to the reserves, but it's the Army that guards it. And that's why Nixon was forced to unpeg because the Army said, no, you can't take this gold. It's not yours. Mm-hmm. Right, it's the people's gold, and the tradition of George Washington still bind them to the gold at the different forts where it's at. Fort Knox is only 60%, the rest for Meade and for New York, I think it is. Mm-hmm. Yeah.
Well, and back to that point that you're saying about this alignment of Trump with basically China and Russia being far more important than the rest of the West. I saw a report this morning that said that Trump wants to deal with the European nations individually rather than dealing with them through the EU, right? And I think that's quite telling as well, because that is a fractured system that is unraveling, and you want to be able to deal with the individual players on let's say a more decentralized level.
Yeah, the problem is I think Europe will have to move forth as a unit mm-hmm. going forward because they've gone too far down the rabbit hole now. Like, how do you deal with the racial immigration of all these people that came up from North Africa, right? The imbalances are there. Trump is trying to deport them, but you also have to find solutions, right? And so, we need labor. The big question is Western values versus the value set of that society, and how do we find that balance? So those are sociological answers more than economic answers. But it'll be interesting because you have Meloni in Italy. I like how she's approaching things, but they need to have cohesion between them. They've gone too far to really dislocate now. Britain is an interesting example of what I'm talking about, right? And at what point do people themselves stand up to their governments, right? Look at what's happening with the farmers, and so far, there's still a little bit of social ambivalence, so they can take a little bit more economic pain. How much pain is it going to require before people say, okay, no mas? I don't know, right? And I think that's where that answer lies in how bad does the economy get over time, right? So I think that's early. I think what's more important is that the U.S. on its own saying this is where we're heading. And what direction they take going forward, right? That again, we don't know. Trump is just setting up the steam, and now he's got the political backing to do whatever he's going to do.
Yeah. Being such a student of history, Jaime, it makes me wonder how you see these, let's say, these looming conflicts in the world right now, and Trump coming in and saying, I'm going to be able to negotiate peace on the first day. We're going to end these conflicts right away. Do you think that we're headed for a world with more conflicts, or, as history as a guide, or less? It seems to me that we need some type of actual conflict and larger conflict to resolve a lot of or before we can resolve a lot of these issues.
So where you're asking me, are we going for World War III? That is a good question. I personally think that I'm becoming more and more optimistic for the future. But because I see the way that I see things is that gold is going to be in the middle of everything. Thanks to blockchain, we have a decentralized tool. Again, I bought my first Bitcoin early on because after I read the white paper, thanks to Jesse Berger, I immediately said to myself, this technology will do to the banking system what email did to the post office. The beauty of a decentralized ledger amazed me. And because of that, I think that the project Enbridge is so important. Bridge, not Enbridge, the Canadian energy company, is so important because that system's already built, right? SWIFT needed to be the key to SWIFT was that the fact that everything had to be done in US dollars and had to be converted before transferring because we didn't have a decentralized ledger. Enbridge is a decentralized ledger, but it needs a peg, and that peg is gold. Now, the key question is, does China want to take over the world? Does Russia want to take over Europe? I personally don't think so. I look at China's policy in Latin America over the last, the first time I came across them I was there with BMO in the late 90s, and I became friends with a Chinese diplomat that we kept meeting at the hotel that I was staying at. And he said to me something very interesting. Our biggest problem is that we need to be understood. And that kind of was the catalyst when I started looking at what they were doing. The policy of America, the Nixonian America to Latin America was, hey, we don't like your government. We're just going to get rid of your government, impose our government, and take your resources. China's attitude to the world has always been, especially in Chile, we need your copper. What does Codelco need to get that copper out? We'll build the infrastructure, whatever you need. We're not going to get involved in your government. You run your government the way you want to, but make sure that we have that access to that copper. That's built massive value added. They never took over Chile. They've never put that kind of influence, but they have access to the copper. Look at the harbor they built in Peru for Peruvian resources. So their approach is completely different. I really don't think that they want to take over the world. I don't think Putin, it's funny because I listened to the interview with Tucker Carlson only to answer one question because And that was the first interview that was done. I don't speak Russian, but it was to answer the question: is he more like Peter the Great or Stalin? And I realized that I personally think that his whatchamacallit, sorry, that he stands for Russians. I don't think he, and Ukraine's is a funny situation. You have to understand the Minsk Accord. I love what what's his name from Wall Street has been going on, and he's Jeffrey Sachs, I think is his name.
Yep.
Right, what he's been saying about the Minsk Accord, and so to understand the history of the setup, right? To me, that was always about the transfer of energy and how we're going to pay for energy. So kind of like the end of the petrodollar. But, if anything, these sanctions have made, in my opinion, Russia stronger. Mm-hmm. They keep buying gold. They have no debt. They have less debt than us. So how bad has it been for their economy if the economic conditions have improved in Russia, mm-hmm. right? And I see that India in that environment and the rest of the world are aligning themselves a little bit more. And I think Trump also stands for Americans, right? For rebuilding America itself. So the world I see rising forward is a multipolar world with some respect among nations, among themselves. So this whole globalist agenda of oh, we're all going to be one, when it's silly. I don't want to be somebody else. I'm me, right? That we're all going to be one society. Well, that's out the window now, and I'm happy for that because I see myself as Chilean Canadian. I have ties to both countries, but we are different. Chileans see the world very different than Canadians do. Americans see the world very different. So I am very optimistic because we are going into a multipolar world where things are shared, and I see gold in the middle and a lot less bankers because we have a decentralized ledger that we can use. And that's why, I've always said gold, silver, and Bitcoin are important for the future because it's a decentralized ledger, but silver will be the GOAT of all investment moves because that's where the true value is. So that's my opinion, right? Mm-hmm. And the 2021, I was on BNN and I said, hey, Bitcoin's going to have a nice move. I've been buying the miners and we made like bandits from 2021 to 2023. This time around, I think Bitcoin and gold could have a similar move going forward, but silver will be the key. But what are we building? We're building a fully decentralized world where nation states can grow and respect each other. And I think Trump can offer that within that mix. What happens to Europe? I don't know. I can tell you that Africa is finding its way. I think Asia is finding its way. And I think Latin America is finding its way on its own. Mm-hmm. So yeah, I'm very optimistic. Mm-hmm.
Well, I think on that note, Jaime, a rare note of optimism for the show. I think we should wrap up. Is there anything that you'd like to leave our listeners to think about or maybe to pay attention to over this coming time?
You know what? Until we see policy from Trump coming out, it's a bit of a we don't know. So we got to wait on that. But gold and silver smack in the middle. And I would urge investors to find an advisor that builds their allocation for them because allocation's key. Mm-hmm. Back to the 30-30-40 model. That's what allowed investors to survive the period of the 80s, mm-hmm. right? And the 30s. Each one of those four periods that we went through, right? So that they could thrive through those periods and survive because those are the financial lifeboats. Mm-hmm. Now, just one quick thing about the dollar and gold. So, we have this whole discussion about gold, about the dollar, the DXY. I see that as the monetary Titanic is sinking, right? So you have the Canadian dollar at $4,000 gold, US dollar at $2,700 gold, because there are different decks in the Titanic. What is important is the edge of the water, the surface was $2,000 gold. Mm-hmm. And as the US dollar runs away from that shore, the price of gold is just signaling that. How far down into the abyss are we heading? Mm-hmm. Right. And that's why the true lifeboats, in my opinion, are still cheap. They're the miners and gold itself. Silver is even better. So I would urge investors to have an allocation and Bitcoin. I still have my core investments in blockchain. Mm-hmm. But gold and silver are also part of that component in terms of how do we survive what's coming next so that we have equity to be able to benefit once this period is over. Mm-hmm. But I am very optimistic.
Right. Yeah. And I think reiterating that earlier point, positioning before all of this really starts to accelerate, I think is key as well.
Correct. So bottom line, as I always pose, what is your allocation? Let's hope it's greater than 0.
Mm-hmm. Absolutely. So for those that are interested in finding more of Jaime's thoughts, available on Twitter at IJ Carrasco, Carrasco, and of course on LinkedIn as well. Jaime,
thank you, Tom.
Thank you so much for your time today. Appreciate catching back up.
Likewise.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.